Hello everyone, welcome back to another video. Welcome back to another weekly outlook. So today we're going to be looking for opportunities for this week. Can we get in some way? Can we capitalize on the market's moves? Um, so let's see what we can potentially hypothesize for this week. We can see. So we had a bullish engulfing here, and we continue to spiral up to the upside. We formed higher low, higher low, higher low, higher low, higher high, higher high, higher high, higher high. We're clearly bullish. We're clearly bullish, right? I don't have data here. In this area, I have no data. There's no data to look at. Nothing. There's nothing here. The most previous one is here on the 7th of November. So that's something I can look at potentially. But do I think we're gonna have a huge engulfing all the way back down here? I highly doubt it. That's a very low probability thing to happen, right? Because that means we're gonna pick up this low, this low, this low. It may happen over the next couple of weeks, but we don't know. But that's the most recent relevant area. Or where this momentum kicked in. Where did momentum kick in? One, two, three. Momentum kicked in when we tapped into 175. 175. So maybe somewhere around this area here, you could potentially look at as well. We tapped in, we tapped back and rejected 175, and momentum came through into the market and we pushed to the upside. But I'm not really interested right now in this because we're all the way up here. So let's just remove this to keep our charts as clean as possible. Let's go back because that's all I have. This is all I have, this past data. We can see, boom, 180.5. 180.5. What actually happened here? I know this is very far away, but this is all I got. So I'm not too confident in this, but we have to do something, right? We have to work with what we got. So that's what I'm going to do. So we can see when price came into this area with a huge bearish momentum, we had a nice bullish engulfing. We didn't even leave wicks into this area, right? And we came back and tapped into this area again and pushed up into 188 again. So we tapped into 188 twice after rebounding from 180.500. We can also see when we closed below, we retested 180.500 and we followed through all the way down over the next couple of months into 132. So from what I can see right now, I can see that we have closed above this area cleanly. There's huge momentum and we just shifted above this area. But precisely, we've shifted above 180. 180 is a key psychological round level and we've closed above this area. So that's the only point of interest I have right now. I am looking for price to come back into this area, leave a leg into this area, and I'm going to look for some small buys, not big buys, small buys, because we could be. So when we have an uptrend, right? Trend, like it's I don't like buying up here because we can maybe push up a bit more. We can maybe push up a bit more, or we can start reversing to form our next higher low structural point on the weekly time frame. That's why I'm not really too confident in buying in these areas. So I'm not going to have a huge TP if I do look to enter here, especially when we're in no man's land. Ideally, maybe I'll get more information on the daily time frame. Let's just look at the 3-day. Yep, we've closed above. Let's look at the daily. Yep, engulfing. Push, push. All right. Ideally, what I would like is price to come back into this area slowly at a nice angle like this. Yeah. And when I say angle like this, maybe like slowly, right? Tap into this area, give us a 4-hour rejection, give us a 30-minute engulfing or some sort of shift in structure on the lower time frame. And then I'm going to be looking for buys into 182.500, which is our next quarterly level. What do I mean by quarterly level? We have, like for example, we have 190, which is our round level. Then we have 187.500, which is a quarterly level. Then we have 185, which is our half level. Then we have 182.500, which is our next quarterly level. And then we have 180. You see how this is in quarters? There's a 250 pip difference, 250 pip difference, 250 pip difference, 250 pip difference. Banks like to trade off these areas because they're nice. It's easy, right? They're financial institutions and they like to work off numbers which are clear and concise, right? For example, when you have a goal, your goal is not 1 million. It's not 1.27 million. It's 1 million. It's a round number, right? Your goal is not 270,000 this year. No, it's 250,000 because it's a nice number, right? It's easy to understand in your brain. And it's the same way with trading. They like to trade off these numbers, which are just easy and clear and concise and not complicated. So that's what we would like. If we don't get that, it is what it is. We may come back all the way here. We may continue to fly up. Do I want to be selling this week? Absolutely not. Like, can I make a, let's see, can I make an argument if we come into 188? Potentially, but do I want to do that? No. It's like we're just so bullish in every single aspect. So that's something I'm going to keep an eye on, but I'm not going to be selling this week. I'm not going to be selling. No. No, it doesn't make sense to be selling. I'm only looking for buys into this area and see what happens. Even if we may not even get there this week. So we shall see. But I'm going to keep an eye on that. I'll just keep an eye and keep that in the back of my mind and see what happens. Because we can see we saw huge reversals of that area. But yeah, let's see. All right, GBPAUD. GBPAUD, we can clearly see we were forming a high, broke the structural point, formed a higher low, higher high, higher low, and we've now, this is our new higher low, this area right here. As you can see, we have broken it. We've broken it. We've broken it. So now the weekly has become bearish. The weekly has become bearish. The daily is daily low, high. This was our previous higher low. We broke it, formed a lower high, lower low. What I want, all right, cool. So what I can see on the weekly time frame, I can see that we are rejecting 186 beautifully. Look how beautifully we're rejecting 186. We can see when price came into this area, we reversed into 18887. When price broke below this area, we retraced with a little wick here and momentum followed through. Now we can see that price rejected here and here twice and we pumped it to 1.9. I can see we're rejecting again, rejecting with a nice doji again. So for me, it's telling me that we're struggling to break this 1.86 area. So do I want to buy right now? Absolutely not, because the weekly is bearish. But I am looking to buy if the daily and the 4-hour can go bullish. And how would the daily and the 4-hour go bullish? Let me show you how. If you see this, yeah, let's get that. Yeah. So I want this high to be broken. So what I want is this is the previous lower high. I need a break, I need a retest, and I need us to push. Then I will look for buys over here into 189, into this daily structural point. So let's put that there. Tap, tap, tap. Okay. I need so if you see the daily close above, we're going to break this previous lower high. If you go on the 4-hour time frame, right? If you go on the 4-hour time frame, let me show you what the lower highs and lower lows are. So we had higher low, higher low, higher high, higher high. I need this to be broken, right? I need this to be broken. This was our high high, came all the way down. We broke it. This is our lower low. And what was the previous high made before we broke this previous higher low area? It was here. So this was the previous high made before we broke this previous lower high, higher low. Does that make sense? Higher low, higher low, boom. This was our previous higher low, but this was the most recent high made, which broke this higher low area. So we can see this as our lower high now. That's our lower high because that was the lower high which was made to break this higher low. Hope that makes sense. And then what did we do? We retraced, we pushed down. That's our new lower high because we've broken structure again. We're continuing to make lower lows and lower highs. This is our new lower high. Pull back. This is our new lower high. Why? Because this high was made before we broke this lower low. Boom. So now this is our previous lower high. I hope that makes sense. If you want me to do a video properly explaining how I do market structure clearly, slowly, not combined with any market outlooks, let me know and I'll do it properly. I'll do it very slowly and so everyone can understand. Just drop a comment below. All right, so let's get our rectangle and see how we can mark up some zones. That's it. All I want is, yep, this is all I want. So I want price to push up, break this high, pull back, reject on the 4-hour, go 30-minute engulfing, 30-minute doji, and I'm gonna look for buys into 188.709. That's it. Let's see how that plays out. If price can come below 185.459, you can maybe get in a retracement to sell down into 184. That's when I'll look for sales. If we come below this area here, if we can break, retest, I will look for sales into 184. Gold, Goldie. Clearly rejected this area right here. Clearly rejected 1940. Clearly rejecting the previous structural point on the weekly time frame. I'm not looking for buys, sells unless we break 1940. I'm only looking for buys this week. So on the daily time frame, I can see we had a rejection, we pumped up, rejection. So ideally, I want to be looking for buys here. Price can come back here. We can look for buys into 1980. Yep, so I want price to come back here before we push into that area there. You can see there's a 4-hour support, a resistance, sorry. Rejections. We've broken structure. It's a bit of a mess right now. So maybe you can wait for price to come here and you can look for some buys. Put your stop loss there just in case there's some sort of manipulation. And you can do some, maybe something like that. Because of how volatile it is, your stop loss would be a lot bigger. I know it's 170 pip stop loss, but you're only risking 1%, so you can adjust your lot size. So for example, if you have a £200 account and you want to risk 1%, you're only going to adjust your lot size to £20. So you either lose £20 or you make around £48. It's up to you. That's how you can do it. Or you can wait for price to break this area here cleanly, come back on the retest and buy up into 2000. That's something you can do as well. Clear. Simple. Done. Thank you very much. I hope this was educational. I hope you take your time, be patient. Remember that if you missed your opportunity, don't worry. There's so many opportunities in this market. As I said on GBPJPY, there was so many opportunities. Let's just get 19th of May. Let's go from the 19th of May to the 12th of June. That's like 20 days. In 20 days, look how many opportunities you have. Opportunity. Like opportunities. opportunities, opportunities, break and retest opportunities, like there's so many opportunities. Like, sorry, I went past the date, but there's just so much. There's so many moves you can take advantage of. I know it's in hindsight easier to say this now, but at the same time, if you're sharp, if your mind's full of clarity, if you're doing your analysis properly, you will see that there's tons of opportunities and you wouldn't be stressed. Like, even if this week's a shit week, a rubbish week, we're not worried about it. It's fine. We'll wait till next week. We'll wait in 2 weeks. It doesn't matter. In 2 weeks, I might make 7%, and I don't make nothing these next 2 weeks. But in the third week, I make 7%. That's amazing. If you have a £10,000 account, that's £700. It doesn't matter about the money, it's about the percentage. It's about the percentage. You need to focus on the percentages, because eventually you're going to get a funded account, hopefully. That's your goal, to be trading on bigger capital, whether it's your own money or funded. And maybe if you're on a 200K account and you earn 7%, that's $14,000, or $14,000 in just because you waited 2 weeks. So you need to be patient. You need to understand what the market's doing. You need to follow your trading plan. And you need to flow in and out of the market with ease. If you do that, you will see, and you monitor your trades, you track your trades, you analyze where you went wrong. So you have to remember something. I've got one little advice, one little thing to say. Like, mistakes are everywhere in trading. That's what makes it so difficult. Because sometimes you follow your plan, you do everything, you feel like you did everything right, and you still lose. And the way I am, right? I studied, I did A levels, I did university, and my mind was always programmed to get everything right, get this correct, get that correct. But it's not like that in trading. With trading, sometimes you just got to accept the loss, right? Yes, you can learn from it, but you can't nitpick every single loss. It's good too, but at the same time, it's not good to do it too much on every single loss. You need to understand what your strategy was and whether you followed it. If you followed it, you shouldn't be too hard on yourself. If you didn't follow it, you should be hard on yourself, right? So it is a challenge. It is a bit of not too much, not too less. It's a bit of like trading's the only, I would say, what literally trading is the only thing in the world where you shouldn't do too much of it. If you're an athlete, you should be training as much as you can, the fitter you'll be. With trading, you shouldn't be on the charts too much, because it can actually affect your clarity, affect your mind, affect your state when you are entering a trade. So it's very different. It's a very challenging market, very challenging career path to take. So I want all of you to be patient. I want all of you to um, stay focused, and yeah, man, let's prosper this week, prosper this month, prosper this year, and take it not trade by trade, but a bundle of trades at a time. Don't take it trade by trade. Take it 10 trades, every 10 trades. I'm gonna take 10 trades, I'm gonna follow my plan, I'm gonna be patient, and I'm gonna evaluate these 10 trades and see where I went wrong. Did I follow my plan? What did I do right? What did I do wrong? What was my percentage change over these 10 trades? And that's how you go. You don't take it trade by trade, because then you're just going to be jumping back and forth between wins and losses and getting mentally stressed. Focus on 10 trades at a time. That's my advice. Maybe you took 10 trades, maybe you won 4, lost 6. Evaluate where you lost 6 and how you lost 6. Did you follow your plan? What time did you enter? What did you do wrong? And even with your wins, what did you do right? What did you do? What was your mind like? What was your emotions like? There's so many factors to take, and trading is very difficult. I want everyone to understand trading is very difficult. It's not easy. You need to stay focused, and you need to be disciplined. I'm just going on here. I'm going on. I'll probably do a separate video for this, but you can see how passionate I'm about just the mental side of trading. Maybe I'll do a separate video on that. But yeah, thank you very much. This video's probably gone over 20 minutes. It was just meant to be our outlook, but it's all right. All right. Thank you very much. Take care. Have a blessed week.